Hey guys, glad that I'm
Hi.
here.
Hey,
Hey.
Kirill.
Hello.
Yeah, good to have you all. Yeah, so today we're coming together. It's our first Twitter Spaces. And today we would like to talk about the Bright Risk Index, which we have launched yesterday. Alex, I think you made a small initiatory for the talk today. Can you say something about it, what we're going to discuss today?
Yeah, sure. Let me just find it. Um, yeah, so I thought we'd just do like a quick recap of the Bright Risk Index, which I'm sure if you guys follow, then you probably know more about it than we do. And then we're going to talk about the release schedule plan, which we published yesterday as well. And then we're going to open up for questions from the community. And we've got a Gravel NFT is up for grabs on the best questions. So start thinking what you want to ask. It doesn't necessarily have to be Bright Risk Index related. It can also be personal. We just thought it would be like a fun community get together in a way. And then we'll just do a sort of wrap up and discuss like what's on the what's up for Bright Union in the future. And maybe we can do something like this again sometime if you enjoy it, or maybe it doesn't work. So we'll see.
And the cool thing is, if anybody wants to ask questions in the meantime, you can raise your hand, and then yeah, we can allow you to participate. Cool. Kirill, should we do a short intro as a starter? Maybe I should. Yeah, maybe Kirill, you can start if you want.
Yeah, sure. Hey, hey, hi. Yeah, good evening, everyone, or morning or day, or whatever, depending on where you are. Yeah, so let me introduce myself. So my name is Kirill. I'm an IT guy, building for 20 years IT stuff, fintech, insurtech, building for blockchain for last 5 years. Basically, it's actually today. I just noticed that I officially started to build 5 years ago, exactly today. Why it is because 5 years ago there was their Dutch blockchain hackathon happening in Groningen, and it was the biggest blockchain hackathon back then in the world. And I was actually founded the team there, and we were building quite nice thingy for amateur musicians. So totally opposite from this boring insurance stuff. Back then it was more about fun and be anyway, we'll not speak too much about it, but it was cool. And actually, I think,
Congratulations. Happy anniversary.
yeah, yeah, exactly. 5 years, it's just a coincidence. Um, so yes, and how I got to this idea of decentralized insurance is that yeah, insurance was boring and nobody liked it, and it is still boring, of course. Nobody likes it. Everybody wants to get rid of that. And on the other hand, we have blockchain tech, which is really a community based or community driven mindset. And then back then, I think 3 years ago, I thought, well, maybe there is something in between where we can join these two polar views into something cool. And I started to dig about into that, and participated a few conferences here there. It was really something absolute. It's still a niche, but back then it was absolutely yeah, literally in Europe I think there were like 20 people into this space of blockchain insurance, and that's how I got connected to people who are now basically founders and actually our partners as well of this stuff. And yeah, in the year and a half almost, no, actually 1 year, a couple of months back, I thought, well, you see that I noticed that this project started to appear. There was Nexus, the big one, and there were like 15 for 2021. There were 15 other protocols under development, and they were all like apples and pears, a little bit different. And for people, it was absolutely impossible to to pick the best fit. So well, we have 1 inch. Why not to build something which is like 1 inch like, but for DeFi insurance? Yeah, and here we are. Actually, 1 year later, we have 3 products actually available and built. But more on this later. Yes. Thanks.
Cool. Thank you for that. Anybody has a question, wants to respond to this? Let me know. Yeah, maybe Alex. In the meantime, go ahead.
Yeah, cool. Thank you. I don't think my introduction is going to be quite as long as Kirill's. But yes, I'm Alex. I've been working at Bright Union since May-ish, roughly, and I'm helping out mostly in marketing, but I do a little bit of everything. I help out in accounting and also with some legal stuff and operations and whatnot. So I think I have a pretty good overview. I'm British and I've been living in Amsterdam for over a year now, and so that's how I got to find out about Bright Union. You know, I'd always been interested in crypto and DeFi, just on the side. It wasn't to do with any of my studies or anything, but when the opportunity came up, I couldn't say no, and now I'm very passionate about it, and the future is bright.
Cool. Yeah, thanks. Let me also shortly introduce myself. My name is Cynthia. I'm a marketing lead. I started in May. I'm from the Netherlands, Amsterdam. I lived there now already for 7 years. And in 2017, I've also worked for a lot of different crypto projects. And I liked it a lot. Back then, there was a time that there were many different ICOs. And yeah, after that, of course, we went in a super long bear market, and I always hoped that I would have the chance to work in this field again. So I'm crazy happy to be part of this team, and I'm super excited also about the Bright Risk Index that we have launched yesterday. So that is in short about me. Yeah, I think that's it. Should we kick it off to Kirill to what happened yesterday? Can you give us a recap?
Oh yes, sure. So yeah, for everyone, if you guys are following what we are building, so we are basically aggregating their risk protocols out there, right? So we are making it easy to compare and basically to choose the best fit for you on the market. But that's what we've been doing for sales side, so for people to buy the cover. But we always knew that DeFi insurance, in principle, is similar to banking industry, but here we are disrupting the industry of insurance, right? So that's a code as the company. So there is no middleman. There are people who are buying the cover, and there are people who providing the capital to cover their risk, and the margin in between, that's earnings. It's similar to like our lending protocols. They're disrupting banks, and here we are disrupting insurance companies. So and exactly, it has two parts of it, right? So as I said, users and depositors. So we integrated the first one for people to buy, and we always knew that there will be time that we will step on another side where we will do something similar, but for investors. And it's always, we have been a little bit afraid back. I think the idea was somewhere in August, and we were a little bit afraid of starting that because we knew that it will be complex, and we were not sure if we have enough of resources and knowledge and stuff. But then we thought, well, actually we do, and started to build, I think, somewhere in early September. And all these months and months of work, which doesn't sound too big, but in blockchain tech, it's like long period. We released the Bright Risk Index literally yesterday. What it is the single instrument tokenized. So there is a token, BRI. It's tokenized asset, allowing people to invest into the whole industry of DeFi insurance in one click, literally, instead of going here and there and spending lots of time, gas, money, and nerves. It's one single instrument. People can put money in the form of DAI, and they will get the BRI token back. And the BRI token is backed by the all assets we put, or our protocol puts into risk protocols. So with Nexus, Insurace, and Bridge Mutual. Why it's so cool? What it solves? Well, it solves actually quite a number of serious issues. First one is their transaction costs. So for us, stepping in BRI costs well, depending on gas cost, it costs, let's say, $30, while to do the same action on Bridge Mutual, for instance, it will cost you $1,500 just transaction fee, and around 400 for Insurace, and around 700 for Nexus. So we are like 15 times cheaper to step in. Second is there, for instance, for Nexus, you have to be KYC'd. You need to provide the passport, ID details, etc. But it's only to step in. Stepping out is also requires has some prerequisites. So there is a timing, there is their cool down period, and you need to spend gas on each and every operation. And here with BRI, what we allow people is they can liquidate their BRI position at any moment, almost any moment, basically getting their DAI back with yield. And another great feature of BRI is that it's auto compounding. So all the interest that protocol earns from all the three guys, we auto invest again and again and again, and so people will just simply see their BRI price going slowly, but steadily up. So that's serious issues, I think, and and it's live since yesterday. We trying to limit there are some risk involved, right? So we are currently running it with the limit of maximum staking amount, but we'll be slowly increasing that, and we'll see how it goes.
Cool, thank you. Lee, I see you requested to speak. Is there something that you would like to ask?
Hi, good afternoon. Thanks for allowing me to speak.
Hey.
Interesting to
Hello.
hear you guys and your background. I'm from sunny North Wales, similar weather to the Netherlands, I'm sure you're aware of. Just a question. I've got quite a few coins in the DeFi market, namely layer 1s and layer 2s, and I have seen a couple of insurance-based tokens, yourself and another company called Infi, Insured Finance. And so I'm just sort of trying to understand the system in terms of, so I have a couple of questions regarding this. So the first one would be, I purchase your token to cover myself. In the unlikely event of a liquidity drain or some kind of pool being drained, what are the protections? Like, what are the what is the safety structure and the backup structure? If one gets drained, is there another one to protect that one, so on and so forth? Or do I understand it completely incorrect? And also, looking ahead, I understand you guys obviously do a lot of work in the background, which we don't see, but we do appreciate it. I know it takes time. But will you guys be basically allowing the sale of your token for your services on centralized exchanges? I know that sounds a funny question with it being a decentralized token. But like what I found as a retail investor is I'm hugely put off the tokens on Uniswap. Since the ridiculous gas fees that we've all wasted, and I've slowly come to the realization as a newbie retail investor that the majority of the coins actually that I could have invested in, that I have invested in, are actually available on centralized exchanges, and thus, saving myself a considerable amount of money on gas fees, etc. So we're just sort of seeing what the pitch with availability of where the token can be purchased and incentives for that, and what the security mechanisms are on the back end of, in the unlikely event of some kind of liquidity drain or some kind of breach or something like that.
Yeah, thanks for your question. Which token do you mean exactly? So are you talking about Bright token or BRI token, Bright Risk Index token?
Sorry, yeah, should have clarified that. So, but I have your product, so I may be a bit uneducated, so I do apologize.
Yeah. Okay. So because currently, actually, so since yesterday we got basically two tokens, right? So one is our utility or governance token, which is Bright, and another is BRI. So Bright itself is there are no capital pools behind. I mean, apart from Uniswap liquidity. So I'm not sure which risk you exactly mean. So it's highly volatile token, right? It can go up, can go down, depending on the price or depending on the demand, right? So it's not really connected to any coverages directly at this moment. We can purchase it. Yes, you can do it on Uniswap. Yeah, you can do it on there. We are listed on the MXC exchange. It's not a tier 1 exchange, but it's maybe in the top 10 or 15. We might be listed on other centralized exchanges later on, but honestly, it's not the top priority at this moment.
Yeah.
Firstly is because it's extremely expensive. Like, for instance, give you an example, like KuCoin would charge us around $300,000 to $500,000, and this is insane amount of money to my mind. Instead of this, we are considering being listed on some non-custodial tools, not on non-custodial how to say, wallets, or maybe some for KuCoin. Yes, it's extremely expensive. But on the other hand, if you want to be listed somewhere, it's either Binance or KuCoin. Others I don't think will change dramatically the demand. But so instead we are looking for basically free solutions, and that's the side chains. It might be a Polygon or BSC or Avalanche or etc. etc. We are looking into even more promising tools, so-called zero knowledge proof chains that will be, I think, on a really hot topic later this year. So in terms of where you can buy the token, the Bright token, there will be a few options. I would not expect it as a tier 1 exchange soon, but there will be additional places. But there is just a little bit expanding my answer is that we have also BRI token, right, since yesterday, and this is yield bearing token. This is token which is not volatile at all. It's supposed to earn constantly yield, but there is another type of a risk, because as you understand, that basically represents your position in providing capital to insurance companies, if we call them like that. And there is a risk of a hack happening, and then there might be a payout or a claim and a payout. Then this token also will lose some value. If this also answers the question.
Can I add something to that? So the Bright Risk Index is basically a way to replace the insurer. So normally in traditional insurance, you see that insurance companies are making a lot of money. People are paying every month premiums, and most of the time there is nothing to declare. And in this business model, we make it possible for anybody to replace the insurer and to earn fees on that and yields on that. And those yields are, kind of attractive. And I think it's a totally different business model from everything that we've seen so far. So it's not business models that you see, a yield token that you see, for instance, in Aave or in Yearn. It's a business model because you get paid by the premiums. These are the cover costs, so people who pay the cover costs to cover themselves. So it's a yield that will remain stable over time, and I think it's also bear market proof, because even in bear markets, people still would like to cover their capital. Yeah, so that is something that I also wanted to add. Is there any other questions around this topic?
No, that's fantastic. Thank you for explaining that to myself. Yeah, I'm not as clued up as you guys. I'm not as clued as I'd like to be. I'm still on my learning journey and learning every day. Every day is a school day in this community, and it's very fascinating how quick the space moves in a week, let alone in a month. Um, so, for example, let's say I have somewhere in the region of, I don't know, say $50,000, and I have some small, substantial investments in some small layer ones and layer twos on DeFi. How would be the best approach for myself to sort of cover that amount? How does that process work, sort of in a nutshell, without going into the finer details? Just so sort of newbie, newbie retail investor that sort of does understand quite a bit, but doesn't fully understand the actual real digging in deep technicals, but just wants to know, if I can put this here, is this going to protect this? Is this risk worth the risk? What is the risk? What are the pros and the cons of the risk? Like, do you have like that kind of setup where, like, could you run me through that possibly, or just give me an idea, please?
Yeah, for
Thank you.
sure. For sure. So we cover for different kind of events. I think the most important one is protection against hacks. So DeFi has been growing immensely, but also the amount of hacks. And in 2021, there was over 2.5 billion lost because of hacks in DeFi. So the risk is huge. I think, everybody knows about the hack that happened last week with Solana wormhole. That was the second biggest hack in DeFi that took place. So that is one thing. On the other side, there is protection against custodial. So when a custodial gets hacked, so for instance, if you have your money or your funds on something like Binance or any of those platforms, those platforms could also get hacked. So it's against hacks and protocol failures. And the last one is yield token depegging. So a lot of people have stable coins, and they could lose the peg with a dollar. And if this happens, with the stablecoin depegging, you're also insured for this. And what's also interesting is that some people, they are doing yield farming, and they're making use of different kinds of protocols. And they have, for instance, they use Uniswap, but they are on Aave, and at the same time, they are using maybe a different kind of exchange. You also have certain bundled covers for popular combinations. So with this, you don't have to buy different insurance products at the same time, but you have it in one bundle. Does that answer your question?
Yeah, that's it's definitely given me a better understanding. So I don't know, I can't speak for everybody else, but I mean, most people, I believe, and I'm saying this from experience, and the people I hang around with who are invested and involved in this technology, I've come to the realization I've probably wasted thousands of dollars of gas fees. I'm sure many of you lot have over the coming months last year for absolutely no reason, for tokens that were actually available. And I think that was just a silly mistake on my part, being a newbie in the community. But I think most people like myself that are at the stages where we are at kind of have tokens, across the board, whether it be on MetaMask, namely usually on the Ethereum chain, Trust Wallet, things like that. And these compatibility issues that obviously are still being dealt with the other cross chains, such as Polygon. For example, I have a token stuck on Polygon, which is a bit annoying, but it's just part of the learning curve. But I just find it's somewhat confusing and somewhat not so straightforward for somebody that's involved in the community and wants to be involved more, but I mean, has a lacking of understanding, or doesn't fully understand to the full potential of so do you guys have a solid roadmap for 2022? What have we got to look forward to coming out in 2022? Thank you.
Kirill, do you want to pick this up?
Yeah, I don't. Well, I will just tell it out of my mind. So, yeah, we basically, so by now we launched 3 products. Okay, so we have the app where people can buy the covers. We have the part of the app where people can invest into, and we have our SDK. So that's basically there for external wallets to incorporate our services. So basically, like Trust Wallet, for instance, where you can buy the cover in one click. So we think that it will be well, it's enough for us to start growing really quickly. So it's really decent set of 3 products that we have in after a year, right? It's much. I think I really feel it's like much more than most of apps in the space have. So, well, the plan is to get maturity and to grow. That's the plan number one. To grow in sales, to grow in TVL, to grow in revenue. Well, maybe grow in a token price, but I mean, it's out of our power. There once one so yeah, target number one is basically to build sustainable business. We are really uh, uh, well, really careful about giving like tokens away, like doing any inflationary mechanism like 99% of products out there are using. We are trying to make the really uh, fundamental build up on fundamentals. Once the business is set up and we start earning, we will enable, well, that's we plan, we will set up our treasury, so we'll get more into DAO concept. There will be a treasury of a DAO, because I see people are asking about the utility, constantly asking about utility of the token, which is indeed at the moment is pretty limited. It's a little bit of loyalty, it's a little bit of governance. It's not really connected to the performance of the app itself, right? So the step number one will be to, as I said, to be well better converted into a DAO with the treasury, where people will start benefiting from the performance of the protocol, maybe in the form of buybacks. So maybe we'll enable buybacks. It's not, well, we haven't decided yet, but something in this direction. We have everything set up already, so it's a lot of work been done over the year, and we just now we want to expand in this direction. Yes.
Yeah, I can only imagine.
All right, Greg.
Thank you for the time.
Greg, I also see that you have a question. Do you want to ask it?
Yes, yeah. Can everyone hear me okay?
Yes, for sure.
Okay. Just I'm out here at the airport, so sorry if things get a little bit loud. I'm in Dallas, Texas at Love Field. Okay, so earlier there was the mentions of traditional insurance, and I think a lot of us who have invested in Bright understand that DeFi insurance in general, it has the potential to be quite a bit more efficient because of the massively reduced overhead and the efficiencies of automation. So my question is, we see right now that DeFi insurance has so much capital that could be covered. I don't know the numbers offhand, but it's less than 5% covered as part of the TVL, I believe. Now, that is a rather niche market compared to traditional insurance itself, as in a global market. Can you expand a little bit on possible ideas when it comes to venturing into the traditional insurance space?
Yeah, I'll pick this up. Well, short question is yes, right? But as you said exactly. Well, the current DeFi insurance business is just nothing comparing to the smallest, even their traditional insurance company. So that's just volume is absolutely tiny. We are setting, yes, we are working on a few partnerships. Actually, one of them is 180 protocol that we are officially partners with. who are doing something in this direction. So they are connecting the blockchain world with traditional finance system in the form of the data trading and setting up some sort of a marketplace and on blockchain for that. We also considering as the possible gateway to traditional insurance. Imagine that, for instance, okay, I will not tell any ideas yet because they're ideas yet only. We've been talking to Chainlink, for instance, for something similar to incorporate their data feeds for traditional insurance data, like maybe, give an example, like life expectancy or the risks of particular housing insurance or P&L insurance, property in the how it's called, PNC, property in the something else. Anyway, yeah, but you know what? We are trying to get there. We are also talking to some are, I think, the auctions, big auctions out there, who are stepping now into NFT world. But honestly, it's super slow. These guys are extremely traditional. They are super slow, and it will just take years perhaps to. They will all get in. They will really quickly get in once it's really hot. But I don't really expect it to happen really soon. Right? And the why we are why it's mostly popular, this the insurance, decentralized insurance, currently for DeFi in particular, because it's for crypto friendly people, right? That's people who are already dealing with crypto. They already a little bit understand the risks out there. They have crypto assets to pay for, etc., etc. So yeah, I'm afraid that at this moment, let's say for this year, that's the main market. But it's not only DeFi, okay? Because we are also, I think next week we are attending some conference or NFT related stuff, because we are actively looking into NFTs and maybe even metaverse, because believe it or not, but metaverse has similar risks of real life, but they are also people who live there. They're also crypto friendly people. Absolutely crazy example. There are some metaverses where the natural disasters happen, like flood or earthquake, and the property in these metaverses cost a lot. I mean, it might cost like $100,000. So actually similar to real property. Okay, so imagine that you own this sort of virtual property, and you might lose it because of the natural matter disaster. Would you buy insurance for that? Well, I guess you would, right? so that's an example we are actually investigating at the moment.
That's pretty wild there.
Absolutely.
But that's the way that we're going.
Exactly. Yes. And also
Okay,
life.
so
So basically, life insurance as well. There, right? I mean, the characters can die. So yeah. Well,
that's wild.
They want it to be as realistic as possible, including all the bad bits of life as well, I guess. I thought metaverse was a bit of escapism, but I guess even you can suffer some losses there.
Yeah, life is hard. So I had one other question, and that has to deal with some of the things that were on the 2022 roadmap. And I've talked with Steven a little bit about some of this stuff, but I wanted to hear your thoughts on it. So on the 2022 roadmap, I believe it was Q4, pay as you go, scalable investment pools is something that's being talked about and experimented with. Can you expand on that a little bit and what that may relate to with the Bright Risk Index, how those may play together?
Yeah, sure. So currently we are a broker of insurance products, right? We sell products which we don't own. Logical next step would be to release our white labeled, our basically product, maybe utilize our partners' infrastructure because they have claim handling, they have risk assessment, etc., etc. But we are indeed discovering the ways to come up with our own product. And one of them is the hot one because we constantly keep receiving these questions about their pay-as-you-go insurance. So any product that you don't have to purchase, but that just covers maybe part of your assets, maybe all your assets across multiple protocols, perhaps, but that anyway, some way that you will get just to insurance is given, like Mastercard gives you or anything like that. So this is the concept that we are thinking of. I will tell you just the name. I call it a Bright Day. How do you like Bright Day? That's a cool name, right? But imagine this is the day that, well, basically, okay, given a little bit more details here, is that imagine we split all the covers out there into days. So once you have Bright Day, for this particular day you are covered for all your DeFi holdings. So that might be a way like this, and you get it in some form. Again, it's just a concept yet. But the good news is that since it's really all comes together really nicely, we have the BRI on the other hand, which will manage some, potentially a lot of capital. All right, and so we might, for instance, add the voting for our DAO that part of this BRI funds TVL will be staked at their basically to back up the risks of this ongoing insurance. That will allow us basically to launch it much quicker. So we will add extra, add extra diversification for BRI holders, but also we can come up with some super innovative products for the DeFi users. How does it sound?
Sounds like a good concept.
Yes, it is.
All right.
Yeah.
I'll leave the floor for somebody else to ask questions. Thank you.
Yeah, thank you, Greg. Ahmed, do you want to go ahead?
Yes, thank you. Can you hear me fine?
Yes, perfectly.
Perfect, thank you. I'll just go through a quick question for me. You've mentioned that putting the Bright token on the different exchanges or tier one exchanges is not really looked at right now, or is not focused at right now. But what I can see is when I see at volume at Uniswap, because that's the main thing I look at, not Mexi to be honest, is that usually when the token goes up, it needs a lot of volume. And as we're not getting any volume recently, or just barely any, to be honest, the token value, even if there's a bull run in the crypto market, we are not going to actually, we might see a big push for us, but as we are micro cap, the push should be bigger, but we're not going to be getting any volume because we're only on Uniswap and we need to get our name known out there. So how, if we're not going to look at tier one exchanges, how are we going to tackle growing our volume and growing the community, basically? That's it for me.
Kirill, before you respond, this central exchange listing is planned for. We had it in Q2, so it is not, as Kirill says, top priority, but it's for sure in our roadmap. But Kirill, you can answer more detailed if you want to.
Yeah. So the token price. Yeah. Well, of course, it's a painful topic. Why is that? I don't know. I mean, we are in the insurance business, and as I said, it's much less. It's not as sexy as their NFTs or metaverse or stuff like this. Maybe we are a little bit fundamental or too traditional so far, because we put a lot of effort into building the business instead of building maybe the hype around. Whether it's good or not, I don't know. In short term, it's bad, perhaps. In the longer term, it's definitely good. So well, we don't. Yeah, well, the token price goes down because there are more sellers than buyers, right? If nobody's buying or selling, it actually will follow the price of Ether, because I think on Uniswap it's pair bright ETH, so it will follow their denominated in dollars. It will go. It will follow the Ether price. But you know what? I believe it's all about business performance. So once we start, and actually we already started publishing the reports of our sales and our TVLs, well, then there will be no question about just stepping in. So then if you see that business is growing, like what would happen with Tesla or Facebook out there, if the business is growing, if there are more and more sales, if the TVL is growing, the people will come, and then the buyers there will be more buyers than sellers. So yeah, we are that's the way how we are plan to tackle that, basically. Yes.
Maybe a more in-depth question, Kirill, because it's a question from Jagdish Dave. He couldn't join us, but he asked it in the Bright Union in Telegram. How does the Bright token utilities will be increased by the BRI? Can you also answer this?
Yeah, I briefly touched it before. So as I said, once the fees are going up, and currently, so guys, so right now the fees, our earnings are going up basically every week. Is the higher, it's more, okay. And with BRI, that will be the major source of the income of the protocol, and it's already happening actually. It already generates the revenue as we speak. Once we see that it's constantly growing, as I said, we will set up the DAO treasury, and the DAO treasury will consist of a few assets. It will be a little bit of Ether, a little bit of USDC, let's say, a little bit of Bitcoins, and of course a little bit of Bright token. So the growth of the fees will be translated into buybacks of these assets. Meaning, like, give an example, and we don't have numbers yet, but let's say every dollar in revenue will be translated into 20 cents buy pressure for Bright. That's how simple it is. So then there will be direct correlation, and bigger TVL of BRI is more buy pressure there. And I'm not sure if we are still having the BRI story ahead, but I seriously think so. If you see that TVL of the partners where BRI takes position in, so combined Insurace, Bridge Mutual, and Nexus. So Insurace has now, I think, 40 million TVL. Bridge Mutual is around 15 million, and Nexus is like billion. I seriously expect that this year a big part, maybe even up to a half of all the TVL of these guys will be provided through BRI, Bright Risk Index. Why? Is simply because, as I said, it's much easier and much faster and much cheaper to invest into these guys through Bright Risk Index. So it's a no-brainer. We haven't started with aggressive marketing of this product yet, simply because we went live yesterday. But honestly, well, and then you just count. So every million in ITVL of Bright Risk Index will be translated into this amount of fees, and these fees will be translated into buyback of Bright. Believe me, the numbers are really promising.
All right, thank you. Yeah, I think we are about to end. Is there anybody else who would like to have the last question before we wrap it up? If not, yeah, Greg, I'm going to give you access. Go ahead. Okay, yeah, Greg, I think I gave you access, but I think maybe it wasn't a coincidence. Yeah, so thank you everybody for joining us.
Sorry,
Yes, go ahead.
it skipped there, so I didn't hear when you were talking. One last question. Steve and I have been talking a little bit on Discord, and it was regarding embedded insurance as a embedded insurance for the risk index as a utility ad for the Bright Stakers. Is that something that could be considered, or have there been thoughts about embedded insurance in some form or another?
It is considered, and actually the call with, so we have to, so in order to do that we need one of our partners basically to create the product called Bright Union, right? So basically the place where people can buy the cover for people staking with Bright Union at Bright Union, right? And then, for instance, we as the dealer, we can offer it to some group of people for free, right? Yes, it is considered, and actually, if I'm not mistaken, just tomorrow there is the call with one of our partners about exactly that. So we are considering to be listed. It's funny. So basically, you will be able to buy Bright Union cover through Bright Union app. It's a little bit, but it will be like this. Yes.
Good to hear. I'll be definitely looking forward to updates on that.
Sure.
All right, cool, everybody. Time to wrap it up. Everybody, thank you so much for joining this. I hope you find it valuable, and if you do, we'll try to do it more often. Thank you, and everybody have a good day. And ciao, Kirill. And also, Jorrit, you're only listening. Next time you'll join. Jorrit is also our business lead. And next time you'll also join the call. Goodbye, everybody.
Thank you. Bye bye.
Ciao.